money. What is an IPO? What is an initial public offering? The best example that I have is from Snap Inc. IPO on the 2nd of March, 2017. If you don't know what Snap Inc. is, it's the parent company of Snapchat, a camera company. During the IPO, I seen the shares go from supposed to open up at $15, $16 a share to opening up at $24 a share and rocketing within hours to about $29 a share. I was involved in this. I got in at 24. I put a sell stop loss at 29, which the next day on the 23rd is when it broke below the $29 mark. My sell order was triggered. I was out of the shares. But this is not financial advice, because that could have went the other way. It could have opened up at 24 and fell to 12. I do not play IPOs anymore because of this. I've been rewarded from playing them, and I've been burnt from playing them. So I don't play them anymore. Am I still on Snapchat? Yes, I still have shares in Snapchat. I sold most of the 200 shares that I actually owned on the initial public offering, but I eventually bought back around $15, and it continued to fall to 10, to 7, all the way down to about $5 in 2019, which is the very bottom of where they actually ended. And they've been going up ever since. Will Snapchat reach its IPO price, its opening IPO price? Will it ever hit all-time highs? I don't know. But as an investor, when I'm researching this company, it's still losing money. But just because you're losing money does not mean you can't grow your stock price. In this video, we will go over what is an IPO, what is an initial public offering. This article is from Jack Kramer and Nick Martell. What is an initial public offering? Definition. Through an IPO, a private company becomes a public one by offering its stock for the first time on a public stock exchange to investors. Understanding an IPO. An initial public offering. IPO is how a company can transform from being privately owned by a select group of investors to publicly available so the general public can invest. It's a lengthy process in which investment banks usually help the IPO company determine an appropriate price to sell its shares on the stock market, and it culminates with list day, when the shares become tradable. With all of the possible pent-up anticipation for the newly and publicly available shares, the IPO can be an intense moment for the company and investors. So it's important to understand certain risks that comes with IPO enthusiasm. Example, after growing since 2012, a privately held company owned by the founders, employees, and early investors, Lyft's shares are now available to the public because it IPO'd in March 2019 on the NASDAQ stock exchange. Other major 2019 IPOs include Uber, Beyond Meat, Zoom, Pinterest, and more. Takeaway. With great excitement comes great responsibility. When a company IPOs, its stock becomes listed on the public investing menu for the first time. It can be tempting to purchase stock in recent IPO companies because there's often media hype surrounding the event. Think of your friends discussing the Facebook or Uber IPO, a lot. But IPO investing can be like jumping into the deep end. It may not be appropriate for an investment for beginning investors looking for stable or predictable investments because the stock price can get volatile. Guys, let me know if you are investing into anything. Guys, let me know if you're going to be doing an IPO. Let me know what you think about IPOs. Have you ever been in an IPO? Guys, like, subscribe to this channel, hit the bell notification, and I guess I'll see you all later.